limitations to the redemption of funds, yeah, by investors.
Oh,
So
that means
it's
people
like,
cannot cash out. Oh, it's like
yeah,
stuck. Oh,
so it's like they have a 11% or 15% cash
wow.
out, they limit it up to only 5%.
Wow,
I
this
didn't add in the
is
most latest one, but the latest one,
ah
UBS,
ah
they restricted 5% out of, I think, 400 billion fund
ah.
or 400 million fund. I can't recall what's the figure, but it's also
Okay,
restricted. So the
okay.
thing is, when you restrict the redemption, those people that cannot redeem, but the fund value keep on dropping, then
Uh-huh.
they are actually caught in a bind.
Oh.
So actually, what is more worrying on the US market, in this geopolitical situation, of course, there will be inflationary pressure, lor. Even though US has a lot of oil, but then the gasoline price keep on increasing as well.
Mm, mm.
And later on, we'll talk about the a lot of crises that will gradually unfold in the coming months, because of not only from the oil, but also there's a lot of like helium, like
Yeah,
urea,
yeah, the
ammonia that
phosphate,
comes out from
yeah.
that. Yeah. So
Sulfur.
yeah, so all this will affect the global
Mm.
chemical engineering sector, you see.
Yeah, that's right. That's right. Yeah.
And
Oh.
I read some reports that even in China, they actually increased the price for export of plastics.
Yes, I heard that also. And then another thing, yeah, actually it's already predicted in our astrology and global trends talk this year. I talk about, the prediction that the West will be very chaotic. Now the West is chaotic, lor, but the East has not stepped in yet, lor. So we will see, lor, what will
The
happen, lor.
the the East, I think the major problem would still be oil.
Mm,
A lot of countries are net importer. For example, like Thailand, South
mm,
Korea,
mm,
Japan,
mm,
Philippines. All these will be quite badly hit,
mm.
in a sense. But I believe that um uh there will be a lot of countries that eventually will shift to coal because of the high oil
Yeah.
price. Coal will still be the cheaper alternative.
Okay. Another
And
opportunity I see is electrical cars.
yeah, the EVs would do well,
Mm,
mainly because this provided that the price of petrol
mm,
remains very high, then
mm,
people will have incentive.
mm.
And even in Malaysia, right now they are cutting back on the fuel subsidy in terms of the amount of liters.
Yeah, I can understand that. It's true because it will be a burden to the government as well.
Yeah, and
Yeah.
yeah, and the thing is that it's also election year coming soon, for Malaysia, and I think the government would keep on
连住 咯.
subsidizing,
Yeah, yeah, yeah. They
which
they
will
will they
then
will they will they will they will tolerate first. Lor.
which will then increase our debt level, which
Yeah,
will then weaken the ringgit, no?
it's also not good, lor.
Yeah.
It's also not
So
good, lor.
that's why I think a lot of people were celebrating about the ringgit getting stronger.
Mm,
But I think that if in an election year we rely too much on the subsidy,
mm,
so that the people will not choose
mm,
another
mm,
alternative party,
mm,
then the downside is that you incur a lot of subsidy debt.
mm. Okay, yeah. Okay, so I think we have quite a lot of people calling in already. I think today we have 70 over registration.
Mm.
Yeah, and then we have 17 people. Let's wait for 1 or 2 more minutes before we start. Okay.
Yeah, I think we
Uh
have a few newcomers over here as well.
yeah, that's right. Okay. We have most of our members are also here. Yeah, there are, I think more than half is our member also. Okay. Yeah. So let's wait for 1 more minute, then we will start accordingly. Okay. Okay, so I think it's time to start the this one. Let us share the screen. If you can see my screen, you give me a one. Okay, hold on for a while. Yeah, if everyone can see my screen, please give me a one in the chat box so that I know. Yeah, thanks, David. Okay, yeah, let me just put it up in the full screen mode. Yeah, okay. Let's start tonight's talk. Okay, so yeah, good evening, everyone. Today is 31st of March 2026, and the time now is 8:31 p.m. Malaysian time. Okay, so this month we will talk about the April 2026 month's forecast on the global trends. And the theme of this month is month of great accumulation. Make sure that you accumulate. So yeah, here what we are trying to do is we are trying to apply Chinese astrology and by me and also trend research by PC Wong to focus on the economic, financial, geopolitical events to help us in making a better investment decision, because we know that the landscape of investment is very much depends on the global trends. Okay, yeah. And I will go through the agenda of the talk. First of all, we will start with the introduction and then a disclaimer. Then we'll go through the brief recap of last month's forecast. We always go back and check our last month's forecast in brief, so that to get ourselves in a check and verification methods. Yeah, and we will go into uh, the influence of the five element energies for the month of April 2026. And in PC section, he will also present a very detailed outlook of last month and also the upcoming month, what will happen from the global trends aspect, especially on geopolitical and financial forecast, and followed by summary. Okay. Yeah, let's go through a disclaimer first. The content here is purely based on our study of global trends in related to five elements on Chinese using Chinese astrology method and also global trend research for you to use as a guideline, mainly in your investment decision. Okay. You should exercise caution in investment, especially in volatile situation, and do your research on company that you want to invest in. Okay, we will not give any stock advice. Additional support for our members will be through email address in members telegram group. um, we analyze different regional economies such as US, Europe, and China. Please note that there will be inherent differences in regional perspective, as the observations are based on our studies of the current economic trends. So this does not reflect any absolute or definitive judgments about any specific regions. Yeah. So for those that are new, we see some new names, new faces. For those that are new, if you have not heard of us, actually, we are the author of unlock your wealth potential, where we have already forecast the upcoming 5 years situation or global trends since year 2023. I think we released that book on year 2023. So if back today, what is happening, I already forecasted. We already see that coming in year 2023 when we wrote the book that time. Okay. Yeah, the book is actually available in online shopping platforms like Shopee or Lazada. Okay, through our publisher Ace Premier. Okay. It used to be available in the um in the bookshop like Popular. In fact, we have launched our book in Popular in MPH as well. So our forecast is actually aligned to planetary energy field, because Chinese astrology, the base is actually on planetary energy fields and cycles, and also the global trend research. And it has, helped us to achieve a high accuracy of 80% to help our member in making a profitable investment. Okay. Yeah. Some of our members has made like 1 or 200 times percent, 1 or 200%. Yeah, it's not times. It's 100, at least 1 to 200% on some of their investment. Okay. Based on what we have discussed in our private Telegram channel. So we have started to write books on global trends. Astrology and global trends since year 2022. Okay, we have started this platform in year 2022. So we started to write books on every year, and we go back and check almost every year. The Our forecast is quite accurate. It's give a very accurate scenario of what is going on from the global trends perspective. Okay, so you can scan this and get our latest book, a free chapter, a free sample for review. PC, if you have the free sample for preview, maybe you can drop in the chat box. Okay, then they can check it out. Okay, yeah. So I think with so many years of testimonial and also so many years of statistic data is enough to prove that our work is not something by mere coincidence. It's proper studies and proper understanding of the planetary alignments to the global trends. Yeah. So yeah, let's go and recap. Let's go back and recap on March, what we have stated. So we have stated that in March, the month pillar is Sin Mao. So I have also stated that at the time there will be since this is sin, so there will be an attention on the sin, on the metal, on the precious metal. But I didn't say it goes up or go down the price. Okay, only our members know whether the price goes up and or down. Okay, so I have and so with this hexagram, itself on on the Xinhua. Okay, yeah, on Xinhua, and also the it's a two mouth communicating. Okay, so the natural disasters I've already predicted last month on natural disaster, climate risk. Okay, multi-element instability. Okay, and also geopolitics, power shift, economics and financial markets conditions that stress, but it's without collapse. Okay. The market does not really collapse, but that is a stress. Okay. Yeah. It did not like suddenly, it plummeted overnight. Okay. So I wouldn't term that as collapse. I do not know whether you agree to that or not. So the trade energy and there will be, trade energy and strategic tensions. So energy is now tensions. We know what is going on in the Middle East, right? Yeah. Okay, so in natural so here you can see multi-element instability, even the weather conditions, the wildfire. Okay, and though also there are warnings of potential eruption of Hawaii and also Philippines volcano as well. Okay, yeah, and historic heat waves set in in the month of March. Also, it records a much higher this one, and and extreme records of heat wave in US, and also on the other side that is a tropical cyclone typhoon as predicted in my book. Okay, yeah, I predicted, I think, in chapter 2. Okay, yeah, and also in geopolitics and global shift, yeah, we can see what is happening. Everyone knows what happens in March. Okay, yeah, all this that is happening, attacks on major, on Middle East itself, and then economic and financial conditions, that we are looking at. The market is down, and also at the same time the oil prices has soar. Okay, then in terms of social sentiment, of course, because the market is chaotic, and potentially there will be inflation, and once inflation there will be unrest, and this is the results that follow this social sentiment and unrest. Okay, on all these item. um okay, so yeah, so yeah, this one concerning about the use of AI, just another very interesting, actually, there is rumors that US is also using AI to train their weapons, okay, so it's very dangerous now. Yeah, so because the AI has the power, to shorten many many years of research. So yeah, let's look at the highlight of the day, which is month of April, 2026 energy. So 2026, the solar term is 清明, clear brightness, okay. It's the 24 solar terms, clear brightness, and what we can see here is actually also a countering month. In fact, it's counter to the to the year pillar, which is not very good. Okay, yeah, it's not very good according to the those who play with classic one, then you will know lah, what I mean here, because in the classic it has mentioned about these things as well. So it's a month of full surprise, here. Okay, the sin you actually metal in the U pillar, so it seems to combine with the month branch again, and this potentially means that the sin metal, the sin metal, means precious metal, could be in demand, but I cannot say about the price. Okay, because this is all prediction. Only our member will have access to this information. Okay, then the weather condition is unstable, grounded, conditions. There will be blockage, mud, and potential flooding. Blockage due to the earth, because the water, you can see the water now. Because this year in the Lee Chun chart, um, the chart does not have any water at all, and suddenly the water comes. So it's going to be a chaotic month in terms of the natural weather condition. And also in geopolitics trends, you can see that government will tighten control on reserves, and boundaries, and more focus on national stockpiles, food supply, energy reserves, and critical minerals again. Okay, it will be even more acute. Okay, so what we experience, in the year of 2025, is just the entree, the appetizer. Now we are in the main course. Okay, so this is, if you see that 2025 is not a good year, now we are really in the main course. Okay, so is this one, and potentially the next half, we already passed the quarter one, the Q2, Q3 is going to be the peak. Okay, so, and then natural disaster trends will be, still again, it's high risk of earthquake, and landslides, and the economic trends are favoring, like defensive sectors, necessities, reserves, and practical assets. So the market trends again will be on capital preservations, selective accumulations. Then so, but the patience and discipline positioning is very important. Okay, so and then let me look at, so let me get rid of this one. So yeah, so this month's hexagram, is actually hexagram number 26, which is the great livestock or great accumulation. Okay, so it's actually a mountain here. Yeah, followed by heaven. This is a 乾卦, it's a heaven. Okay, mountain and heaven together. So the power is present, but actually it's held back because you know why? The mountain suppressed the heaven. The heaven is not on top. The heaven is at the bottom. Okay, so resources are gathered before actions. So success will come from discipline, training, and restraint. So rash actions waste will waste strength. So it's a month that the world they may look quiet on the surface, but actually is gathering force now. Is quiet in terms of may look like actually the region now that is really chaotic is Middle East, and slowly it's gathering force to the energy is gathering force itself to have in quite a bad months ahead. Okay, so yeah, this is only the starting point in other words. Okay,
I think,
so
Evelyn, on
yeah,
top of it is that um, the Middle East is like, if we look at the um, world as a pond, yeah,
uh
and the Middle East is the first rock drop.
uh
We are actually seeing the ripples being
mm,
reverberating across the pond. And some news are out that Turkey may want to join in and back Iran. And the area is like widening.
yeah,
And on top of it is that not only on the issue of uh geopolitics and or war, but also on um the scarcity of resources
yeah,
that is reverberating across
mm,
the pond as well and affecting a lot of countries that actually rely on imports
mm,
for their economy. So it's
mm.
like, it's spreading across on a wider scale.
Okay, yeah, thanks for that perspective. Yeah, so it's like gathering for force for rippling effect. Yeah. Okay, so yeah, so this is my this is what I can see from the five elements standpoint from the hexagram of the month, and also um the parts of the month. Okay, so yeah, so over to you, PC, for your side to share now.
Okay.
Okay, thanks. Okay, let me stop share.
You stop sharing already?
Stop sharing already. Okay, I make you a co-host. Sorry,
Yeah.
hold on for a while. Let me just make you a co-host. I think just now I've forgotten we talk so much. Yes. Okay, go ahead. PC.
Okay. So let's backtrack to what happened uh in March. So we make a lot of forecasts, but sometimes there are uh it could be 15% correct, or 70% correct. It depends on what actually happened.
Mm,
And here we look at a situation whereby we have the hold on, let me maximize the uh, what happened in March. So we mentioned that there's the risk of rising corporate and household delinquencies. Okay, but so far the report is not out yet from the uh, Federal Reserve. So we will only know probably when they publish the report in I think in the month of April. So let's see what happens then. So we forecast that the war in Iran will trigger a flight to safety into gold and silver, as did the Ukraine war in 2022. But the opposite happened. Gold and silver were slammed while the US dollar strengthened. So what happened is actually as the situation in Middle East worsened, many Gulf nations sold gold and US treasuries to secure funds to manage their war-torn economies. We know that a lot of the regional oil producing facilities were being targeted. So inevitably, there's a lot of people that are very worried. So what the government did, they have to pacify the people. And that means selling their assets to fund the government. So the selling of safe haven assets for US dollar strengthen the US dollar, and this provides the opportunity for the bullion banks and speculators to hitch on the selling, further driving the prices of both gold and silver lower. And on top of that, other countries were also selling gold and US treasuries to raise US dollar to buy gold. So unlike what happened in the Ukraine war, everyone was a bit worried, okay, because of the sanctions affecting Russia, and therefore the price of oil spiked, and people were more or less hedging against that potential inflation by buying gold or silver. But here is a situation whereby it got so worse that people are selling their assets just to secure the oil for their respective countries. So that is why we see gold and silver uh, being sold off, pushing the price lower. And for those who have receive the weekly report every week, I will show uh how much net how how many net short contracts were the bullion banks holding, and all of you know that they need to get out of their net short position because their paper loss is in the tens of billions of dollars. So what better opportunity than when the US dollar strengthens, the bullion banks come in and smash the price lower so that they can get out of their short position. So the selling of US treasuries push the yield higher, which boosts the narrative to sell gold and silver. So oftentimes a lot of trading is done by algorithm, and they normally look at strong higher US Treasury yield means stronger dollar, means sell gold and silver. So it is all built into the algorithm. And because of that, we see that the price of gold went from around 5,200, all the way down to about 4,200 at some point uh, a few weeks ago. So then in Europe, we mentioned that the US dollar, because of this war, the US dollar would weaken against the euro and British pound, but the opposite happened. Okay, so due to the surge in the demand for the US dollar, both the euro and pound underperformed the US dollar. The US 10-year treasury performed better than major European government bonds. Okay, the US 10-year treasury yield rose only 10.98%, Germany rose 13%, France rose 15%, and UK rose 14.8%. What we anticipated did not happen. So, but where we got right, now we predicted that the Trump administration would draw attention away from the worsening economy and domestic issues by going to war with Iran. The reason behind it could be to rally Americans behind Trump, but gauging from the response, Americans are sick and tired of war. Now, you might have recalled that Trump was very successful in his venture with Venezuela, not because of the war that is fought there, but because a lot of the major politicians in Venezuela has been bought off by the Trump administration. So they handed Maduro to uh, the US. And that's why we didn't see any large-scale war in Venezuela. So I think Trump, knowing that his polling so far is not very popular, so he was thinking that perhaps by riding on the success of Venezuela, he wanted to do the same thing with Iran. Of course, the narrative is also driven by a few things. One is that the expansion of BRICS, the trading of uh, domestic domestic currencies, uh, offsetting the petrodollar, and perhaps under the ill advice that by securing Iran, then the Trump admin will have a greater control over the flow of oil and therefore able to contain China. So there are a number of reasons, but I think most probably why he was so eager to go into Iran was due to his falling poll numbers. Okay, he needs something that will supercharge his popularity, but then that did not happen. Okay, so we mentioned that the Democrats will go against Trump on key issues, and we were right. The Democrats have successfully blocked the Republican led SAFE Act. House Democrats also rejected several attempts to pass the Department of Homeland Security funding bills. And there's been some progress with the Clarity Act, and the House passed the act, and it has now reached the Senate. However, passing the Senate may prove to be challenging. The US budget deficit grew from 697 billion in January to 1 trillion in February. As predicted, inflation is rising again, this time more pronounced. The Fed's favorite indicator, the PCE, rose 3.4% year on year in February versus 3.1% in January. Uh, Powell, post FOMC, commented that inflation remains somewhat elevated. So although industrial production PMI ISM surveys showed resilience, something is breaking in the private credit and housing market. Even though the Supreme Court has ruled that Trump's emergency tariffs are illegal, Trump is not going to give up. And here are one particular headline, okay, that Trump has absolute right to impose new tariffs after Supreme Court blow. And as we forecast, the Iran war has not only disrupted the stock market, but the entire global economy as well, and countries face an unprecedented shortage of oil and gas after the Strait of Hormuz was closed for traffic, save for a few countries. With the Iran war likely to lengthen, the negative sentiment will persist, and we can see the impact on the S&P, which has declined by 298 points or 4.33% since the war started. That was up to last week. So in Europe, we mentioned the wide disagreements surfacing in Europe, and Spain openly opposed the war, comparing to other European nations that generally urge restraint without directly criticizing the US or Israel. Poland has also taken a firm stance regarding the escalating conflict between US, Israel, and Iran. Hungary and Slovakia have intensified their opposition to new EU financial aid for Ukraine, with Czechia also taking a cautious approach to the funding mechanisms, leading to significant tensions within Europe. So here we can see that even within the European Union, there is a lot of internal bickering. And in our book, since a few years back, we have continuously mentioned that the EU is getting more and more fragile, and an eventual breakup is just a matter of time. So Europe now faces an energy crisis. This was a lesson which we saw in 2022, which Europe entered into an energy crisis, which pushed the price of oil and coal much higher. So, and right now, with the source of oil from the Middle East being cut off, and Europe inevitably uh, having a very frictional relationship with Russia, there is which is also cutting off its energy supply. Okay, so because of all this, right now Europe can only perhaps rely on the US, but the US is not going to charge the European nations um, in a similar price like they get from elsewhere. I believe the US would want to penalize Europe because most of the NATO representatives um, in Europe declined to come to Trump uh, call to support the war with Iran. So I think if Europe were to buy from US, I believe the Trump administration will impose a penalty. So, and as predicted, Europe now faces economic headwinds as the euro area and UK retail sales fell 0.1% and 0.4% month on month, respectively, and industrial production fell 1.5% and 0.1% month on month, respectively. Now, given the situation whereby they will face inflationary pressure um, from the shortage of energy, and also because of the failing economy, Europe will be in a crisis. So China, where we got right, retail sales, industrial production, and fixed asset investment all performed better in the January to February period compared to December 2025. Although fixed asset investment saw an increase compared to December 2025, the real estate market is still in shambles. CPI rose in February, but is lower compared to other peers. According to SCMP, China achieved significant technological breakthroughs in March, focusing on AI, aerospace, and medical tech. If you recall in our March forecast, we say that China would actually reveal several breakthroughs in the month of March. So key advancements include ByteDance powerful SeedDance 2.0 video model, a pioneering commercial brain-computer interface from neural scale, and superfast simulation software for designing hypersonic weapons. Chinese scientists have discovered a way to turn cheap coal into valuable ingredients for medicine. China's demand for gold remains robust, with 600 kilograms of gold available for sale, being grabbed within 1 minute. So the members in the weekly report uh, would have some info why this happened. Now, the thing is, although the price of gold and silver is down, but the demand in China is very robust. That is why you see that as soon as any gold hit the market, it is being sold off almost immediately. The demand is so great that the PBOC have to impose limitations on the amount of gold that is available for sale for the citizens. Now, if you all recall, about a month or two ago, I did mention that a lot of the CFDs or uh, certificates of fixed deposits are going to mature this year. I think to the tune of trillions of renminbi. So interest rate have already come down, and real estate is already in shambles. There is the no other safer way or more rewarding way for a lot of the citizens to park their money except into stocks if they are in for growth. But for those who are conservative, gold seems to be the better alternative. And that's why you see that there's a mad rush to buy gold whenever the price drops. So this will inevitably provide a floor for the price of gold. And on the industrial side, due to the heavy uh, demand from solar, wind, as well as EVs, UAVs, robotics, you know, all this actually requires silver. And because of that, the industrial demand for silver has also skyrocketed. Now, it will become much worse in the event that there'll be more transition from ICE into EVs. Okay, because the price of petrol has gone up, ICE would become more expensive to the consumer compared to EVs. So China demand for gold, as I mentioned, remains robust, and here are some news, okay, about what happened. And then PBOC continue to add to its gold reserves, where they have continually bought gold for 16 months. So industrial demand for silver is fast emptying the SGE vault. Shanghai added more than 21 million ounces of silver at the SGE and SFE vaults from 16 to 20 March. Due to the premium in price over the COMEX, the SGE and SFE have the advantage in replenishing their silver stocks. Whereas in the COMEX, the replenishment is much slower because of the premium in price. They can actually offer to the miners to sell to them directly. And a lot of industrial heavyweights are also buying silver directly from the miners. I think I've shared a report that Samsung is one of those companies. So especially with the Iran war being a primary driver of future oil crisis, industrial demand will increase as countries look for green energy as a stabilizer and consumers flock to EVs. So let's have a look at the US economic indicators. CPI was 0.3% month-on-month in February. Year-on-year, it rose 2.4%, unchanged from January. Core CPI rose 0.2% month-on-month in February. Year-on-year, it rose 2.5%, unchanged from January. PPI rose 0.7% month-on-month in February. Year-on-year, it rose 3.4%, up from 2.9% in January. Now, I have often shared that the BLS often manipulate the inflation. And a more precise indicator would be the PPI. Here, because that is the input cost of materials, okay? So with the PPI now rising in February more than January, it is telling us that inflation is gradually rearing its ugly head again. So core PPI rose 0.5% month-on-month in February. Year-on-year, it rose 3.9%, up from 3.4% in January. Retail sales fell 0.2% month-on-month in January. Year-on-year, it rose 3.2%, up from 2.4% in December. Now, retail sales is still being delayed by a month. Industrial production rose 0.2% month-on-month in February. Year-on-year, it grew 1.4%, down from 2.3% in January. Housing starts rose 7.2% month-on-month in February. Housing permits plunged 5.4% month-on-month. New home sales fell 17.6% month-on-month in January. Year-on-year, it fell 11.3%. Down from 3.8% in December. So existing home sales rose 17% month-on-month in February. Year-on-year, it fell 1.5%, up from negative 4.4% in January. Pending home sales rose 1.8% in February. Year-on-year, it fell 0.6%, up from negative 1.2% in January. Preliminary PMI for manufacturing came in at 51.6. For services, it came in at 52.4. So even though there are some indicators that are showing enriching weakness in the economy, but the PMI indicates that there's still expansion, okay, in the economy. So US Conference Board Leading Economic Index, or LEI, inched down 0.1% in January. to 97.5 following a 0.2% decline in December. Overall, LEI fell by 1.3% over the 6-month period from July 2025 to January 2026, half the rate of decline compared to 2.6% contraction over the previous 6 months. So you can see here that the economy, the leading economic indicator is moving on a very narrow band. It goes up, it comes down, it goes up, then it comes down, and then it goes up. Now the trend is it is inching down. So this area could be an indication that we are facing a stagflation. So US trade data, US Census Bureau and US Bureau of Economic Analysis announced today that goods and services deficit was 54.5 billion in January, down 18.4 billion from 72.9 billion in December. Now, interestingly, why the trade deficit came down was gold. The US exported huge amount of gold during that period that brought down the overall trade deficit. So US budget deficit, US government saw total receipts at 313 billion and total outlays of 621 billion in February, resulting in a total budget deficit of 308 billion. Year to date, 5 months from October to February 2026, total budget deficit was 1 trillion. Now, if we look at it, we are only into 5 months of a 12-month fiscal year. With the ongoing Iran war, we could be seeing the US trade budget deficit surpassing 2 trillion by the end of the fiscal year. And this is very worrying because within the next 12 months, the US needs to refinance $10 trillion of debt. So that could mean that by the end of this year, US debt could surpass more than previous years, okay, where I think the highest it came to was around 2.6 trillion. We may see it reaching closer, more than, we could see it reaching more than 3 trillion. If let's say, we know that the US can never pay off its principal amount that it borrowed because the interest rate have to be financed by debt and the principal have to be refinanced by debt. So that is why it is going to escalate or rather snowball down a hill. Okay, while the ongoing war in the Middle with the ongoing war in the Middle East, the budget deficit will most likely widen for the six months from October 2025 to March 2026. And this trajectory will push the budget deficit by more than 2 trillion by the end of the fiscal year in September 2026. So let's take a look at the private credit crisis. Now, the US private credit market is currently estimated at 3 trillion. It is now facing significant scrutiny in multiple private credit funds, which put a limit on redemption. In March, Ares Strategic Income Fund capped redemptions at its 10.7 billion fund, fulfilling only about 5% of the request on a pro rata basis. In March, Apollo Global Management invoked its quarterly withdrawal limits to manage a flood of exit requests. In February, Blue Owl Capital permanently halted redemptions on one of its BDCs. BlackRock, Morgan Stanley, and Cliffwater have also reported restricted outflows in their respective private credit vehicles to maintain liquidity and protect remaining investors. Here they say protect remaining investors because the more people redeem, the more people would want to exit, and then the price of the fund would actually fall. So here it's like, it can go both ways, okay? It is like saving their own skins rather than protecting the investors. Oaktree and Ares Capital, okay, bonds issued by these funds have seen widening credit spreads, signaling significant liquidity stress and pressure from high redemption volumes. While not yet a full-bloom systematic collapse, a series of high-profile defaults and liquidity pressures have led experts and regulators to draw parallels to the 2008 subprime crisis. So another key issue is that most of the US growth economy over the past decade or so has been driven by the availability of private credit. And now with private credit being shrunk, the growth economy could face similar issue. Okay, and we all know, okay, like OpenAI is facing severe lack of funds, that they also closed their AI for video. And because of that, we see a lot of the so-called memory chips prices plunging and inevitably affecting those companies that have already come up with plans to expand production of the memory chips. And with OpenAI now saying that they cannot afford to buy so many chips, a lot of these memory chips companies is going to see further drain in the share value. So here is an example of how the private credit crisis have affected some of the companies. Okay, like Blue Owl Capital has fallen 41%. Apollo Global Management have fallen by 25%. Now, this, of course, was up to 24 March, but in the past few days, there has been further downside. So impact of the Iran war on US economy. The resultant oil shock from the war with Iran will accelerate the inflationary pressure on the US economy. As I mentioned, even though the Trump admin boasted that they have the huge amount of oil, okay, but gasoline price have been rising steady. I think at one point it surpassed $4 per gallon. So oil is more than a source of energy. It is the source of many polymers used in chemical engineering. Manufacturing could be deeply impacted as a result. Gulf nations are primary exporters of urea and sulfur. The sharp decline in the supply of urea and sulfur could impact the synthesis of fertilizers. Many countries have banned the export of fertilizers just when the planting season starts in April. This could lead to a food crisis further down the line. American farmers will be hurt and food inflation will be felt across the board. Now, spring is always the planting season. And right now, there's a lot of companies are not exporting fertilizers because they want to give priority to their own farmers. The other thing with sulfur is that it is also used to leach the mineral from the ore. The mining sector could be hit with higher costs, and some producers may be forced to cut their production of critical minerals, thus pushing the cost of raw materials higher. About a third of the world's helium comes from Qatar, and this will impact the semiconductor industry as helium is used as a coolant during the lithography, etching, and deposition. So imagine the semiconductor industry coming to a sudden halt because there's just not enough helium everywhere. Okay. Um, that could be very disastrous. Okay, and definitely will blow up the AI bubble. And I believe that a lot of the semiconductor manufacturing companies right now are trying to secure their helium supply, but with a third of it gone, they have to pay either a much higher price to secure it, and therefore it will hit their profitability as well. So many Gulf nations have been financing the AI boom in the US without continual funding from the Gulf nations, and with private credit on the lifeline, the AI bubble could pop. So we, as a result, we are seeing cumulative crisis now unfolding. Oil shock, food crisis further down the road. Right now, private credit crisis and inflationary pressure because of the oil shock, which all result in more layoffs because it affects across broad sectors of the economy, as I mentioned, in the manufacturing, in the agriculture industry, in the semiconductor industry, etc. So all this would result in major recession. And as in any recession, we know how the Fed will react. Okay, and it will definitely impact the US dollar. Now, if the Fed hikes interest rate in tandem with inflation, then we will see the global economy falling off a cliff. But the Fed will not be able to hike beyond the US ability to pay its debt, which now sits at 39 trillion. So we will remain in a long stagflationary cycle. Okay, because inflation will continue. The Fed cannot hike beyond a certain point. Now, if the Fed cuts interest rate because of the threat of a global recession, then the global economy will accelerate, but only for a short while before inflation rears its ugly head again. Now, we will then see massive inflation and the economy will slow down as companies cut production and increase layoffs, and we will be back to a long stagflationary cycle. So, either way, because the world economy has been driven by debt for so many decades, that we have come to a bursting point. Whatever the Fed wants to, or other central banks choose to do, it won't end like it did in 2008. Okay, because the debt in 2008 is many uh, percentages lower than the current debt. Okay, so that is why if we are not careful, and if the oil crisis worsen even further, which means that we are looking at now the Strait of Hormuz is about 20% of oil being exported to the world. But if let's say the Yemenis, okay, from the Houthi fraction created another choke point in the Bab al-Mandab Strait, then you will see another 10% of oil being squeezed out. And that could result in potentially a global depression because you have no oil, not enough oil. Everyone will be fighting over it. There'll be inflation. And because there's not enough oil, industries can come to a full stop and then there'll be depression. Now, Peter Schiff, a very well-known economist, would like to term this as a hyperinflationary depression. And that is when, we are at the Fed will be at, will be at loss at what to do next, which led to a lot of central banks through their soft narrative suggesting that it may, in the worst of situation, we may come a time where the only available asset that carries value would be gold, and therefore to revalue it to a much higher value, to erase as much debt as possible so that we can continue with another cycle of growth. Okay, but right now at this juncture is more a lot of talks and suggestions, and there's no real commitment on any parties to embark on such an action. So what could happen in April? Inflation is expected to climb and consumer sentiment might drop. Major economic indicators will likely weaken, especially retail sales and industrial production. Private credit crisis will worsen, and Trump admin requested additional 200 billion in defense spending. US budget deficit will widen further. Recent poor auction of US treasuries indicate that investors are skeptical to the US ability to meet its debt obligations. Annual interest payment on debt will increase. The US will find itself deeper embroiled in the conflict in the Middle East with domestic support waning. Any attempt to put boots on the ground in Iran will result in tragedy. The US market will face volatility as uncertainties grow. Trump will try to pump the market with upbeat statements on how the US is winning or hints of a ceasefire and or negotiations. Now we have been seeing this trend lately, okay? And sometimes it's good for the market, and then he changed his mind, then the market will sell off. That is why Evelyn just now mentioned we are entering to a period of uncertainties and with it volatility in the stock market. The market expects the Trump admin to announce a new floor price for critical minerals together with the need to build these reserves. Now, there has been talk that the US government will come up with a price for critical minerals so that companies can continue to produce these critical minerals without suffering huge losses. Otherwise, there's no incentive for them to uh, expand production or to develop the mine. So US LNG and oil producers will benefit as long as the Strait of Hormuz stays closed for the bulk of international shipping. Now, Europe economic indicators. Euro area CPI came in at 1.9%. Up from 1.7% in January. And the UK CPI came in at 3% year-on-year in February, unchanged from January. Euro area retail sales rose 2.8% in December. UK retail sales rose 2.5% year-on-year in February, down from 4.8% in January. German manufacturing PMI came in at 51.7 in March versus 50.9 in February, while services PMI came in at 51.2 versus 53.5 a month ago. France manufacturing PMI came in at 50.2 in March versus 50.1 in February, while services PMI came in at 48.3 versus 49.6 a month ago. UK manufacturing PMI came in at 51.4 in March versus 51.7 in February, while services PMI came in at 51.2 versus 53.9 a month ago. Now, for those who have been following our session, you can right now picture that the PMI for major economies in Europe has been moving in a very narrow band. Okay, seldom we see that the PMI rises above 55, but it's almost all the time in staying slightly on the expansion path of above 50, and sometimes it falls into contraction below 50. But there's no huge major expansion that carries with it, okay, a very significant expansion. So this goes to show that there is some challenging environment in the European economy. So Europe, what could happen in April? Europe will face an energy crisis cut off from the Middle East and Russia. If you all recall, Russia said that, well, since Europe is not interested to do business with us, we might as well cut them off before they announce that they will cut us off. So that is what Russia has been suggesting. So the US will not go easy on Europe after many nations refuse to support the US war on Iran. It will exact a heavy price for the supply of oil and gas to Europe. Sorry, my slide seems to run a bit. So thus, Europe could face higher inflation moving forward. Higher inflation and lack of energy could impede Europe's economy. Industrial production could face massive headwinds. Now, there's a wave of nationalism encompassing Europe. Nationalist parties may see their popularity rise. More nations will criticize the US war on Iran, and this could unravel NATO. Major 10-year bonds in Europe could see further rise in yields, and that is because of the poor economy, leading to a lot of investors feeling skeptical about Europe's economy, and any government that wish to fund its economy or to stimulate the economy by raising bonds would see investors demanding much higher yields. China's economic indicators, CPI rose 1.3% year on year in February, up from 0.2% in January. Core CPI rose 1.8% year on year in February, up from 0.8% in January. You can see that inflation in China is creeping, but it's still uh, the likes of Europe and the US, where inflation is on the 2 to 3% range. So PPI fell 0.9% year on year in February, up from negative 0.4% in January. So retail sales rose 2.8% year on year in the first 2 months of 2026, up from 0.9% in December. Change this to. And industrial output rose 6.3% year on year in the first 2 months of 6, up from 5.2% in December 2025. Fixed asset investment rose 1.8% year on year in the first 2 months of 2026, reversing the 3.8% decline recorded in the whole of 2025. So unemployment rate was 5.3% for the first 2 months of 2026. In February alone, survey urban employment was 5.3%, up from 5. Okay. I'm sorry, my computer keeps on cutting me off halfway through. I do not know why. Where was I until the sharing on
Oh, same
which
for me.
area?
I also do not know where. Okay, hold on for a while. Anyone remembers where's the last slide or not? Let me check. China. Thanks.
Okay.
Yeah, thanks, Mitra. Mitra, very attentive.
Looks like I got to share again.
Ah,
Very much my apology. I do not know why my computer keeps on cutting me off, yeah, the line.
ah, okay. The Bitcoin, Audrey, I will answer you in the members area. Okay. You look up for that.
Okay, let me share again. You need to turn on sharing,
Ah, okay, sorry.
Evelyn.
No problem. Let me just check. Where are you? Okay, make co-host. Yeah. Okay, make. Yeah. Okay. Um, can already.
Was it on China economic indicators or China trade data?
I think it's on China trade data already.
Okay. So, value of China's international trade and goods services exceeded 3.93 trillion in February 2026. So, of the total exports of goods and services reached 2.15 trillion and imports stood at around 1.79 trillion. So, resulting in a surplus of 360.3 billion renminbi. US dollar terms, export amounted to 309.2 billion in February. Imports came in at 257.3 billion, leaving a surplus of 51.9 billion. So total surplus to date, January plus February is 65.6 billion. Plus 51.9 billion is 117.5 billion. So you can see that the China's China is unlikely to reach 1.2 trillion this year in terms of surplus by looking at these first 2 months itself. Although it's a Chinese New Year, but if let's say it's only at 117.5 billion, it needs if we add on another 6 times, okay, probably it will be down from last year's 1.2 trillion by several tens of percentages. Now, this is also because of the oil shock and general challenge in the global economy, which affect the consumption of the of nations, which China is a major exporter. So higher inflation, poor sentiment, lower consumption, therefore the imports of goods will likely drop. So I don't think China will reach a similar amount of trade surplus as last year. So China real estate, China's housing market show further signs of stabilization in February as home price declines in 70 large and medium-sized cities continued to narrow from previous month. Now, even though the statement is such that it shows that there's some narrowing, but if we look back over a much longer period of time, sometimes it will widen at times, and therefore, it will be always some ups and downs, but on the general trend, it's actually moving down. So in the first 4 tier cities, Beijing, Shanghai, Guangzhou, Shenzhen, prices of newly built homes remain flat month on month in February, compared with a 0.3% decline in January. Among them, Beijing and Shanghai both saw prices rise at 0.2%. Guangzhou remained flat and Shenzhen fell 0.3%. Prices of second-hand homes in first-tier cities edged down 0.1% month on month in February, narrowing by 0.4 percentage point from January. So Beijing and Shanghai recorded increases of 0.3% and 0.2% respectively, while Guangzhou and Shenzhen recorded declines of 0.5% and 0.4% respectively. So even among the first tier cities, it's very inconsistent. Okay, across 31 second tier cities, the average month-on-month price decline was 0.2% for new homes and 0.4% for resort homes, while prices in 35 third-tier cities fell 0.3% for new homes and 0.5% for resort homes. All these figures represented a 0.1 percentage point narrowing from the previous month. Now, if you recall about a few years ago, China has this rural revitalization, which encourage a lot of development in the rural areas. But right now, you see that even the rural areas in the second and third tier cities. The third tier cities itself is seeing some price decline in the real estate. So the Chinese real estate market is expected to be depressed for a long time, mm, simply because I believe the Chinese household have lost faith in the real estate sector. And this is a sector which Evelyn have already mentioned uh, on the onset in 2024 that we are entering a cycle where property prices will the property sector will face a lot of challenges. So on top of that, I think Chinese right now are more uh, eager to park their money into savings or into gold. So what could happen to China in April? The oil crisis and supply chain shock will result in inflation creeping higher in China. Retail sales could soften as consumers prefer saving to consuming. PBOC will have little room for monetary easing given the expectations of higher inflation. And on top of that, I think over the past year or so, the PBOC have been aggressively cutting interest rate by 25 basis point or 15 basis points. So I don't think the PBOC has a policy to follow the Fed going into zero range bound interest rate because that is not something that is uh, in their minds, okay? Because they still ultimately there are some savers, and I believe that they will not cut so deep as so that the savers wouldn't have anything left, okay, to wouldn't earn any interest from their savings or very minimal interest from their savings because some people would just, especially the Chinese population, they would prefer to save, okay. As you can see that their savings rate is around 160 trillion renminbi, and that's equivalent to more than 20 trillion US dollars. So if they uh, put it to zero bound interest rate, I think a huge number of population will make noise because they want to see their money uh, earn interest, okay? And there's only so much the PBOC can do. So government stimulus will lack firepower as consumers may prefer to save. Now, given that the challenging environment in the global economy, there is less likelihood that consumers' sentiment will be very buoyant. You can see that how it has started to decline in terms of retail sales during the second half of last year. Although the first 2 months of retail sales is better than December, but generally for a Chinese New Year, uh, it somehow looks weak. Okay, just my opinion. So global economy will face challenges with many countries seeing their economies crushed. This could threaten industrial sector in China because the if the other nations who are also major Chinese uh, industrial sectors customers or manufacturing sector customers, if they see their economy depressed, they don't have the money to spend at all. Okay, and this will also affect China's industrial sector. However, the demand for EVs, batteries, storage, and charging equipment may offset the decline in other sectors. So the oil shock will also push the development of green energy into overdrive. Companies in the green sector could benefit as a result. China will likely expand its coal production to meet shortfalls in energy and chemical, especially in urea, sulfur, etc. supplies. So given the global uncertainties, China demand for gold will remain buoyant, industrial demand for silver remains strong, and significant withdrawal from the SGE and SFE. Meanwhile, COMEX stocks remain low, and real estate market will remain in the doldrums. So in terms of geopolitics, the US looks certain to start a land invasion of Iran, but given the mountainous region along the coastal areas, the US invasion force could face a bloodbath. Now, this is not just my opinion. Similar retired generals, including CIA personalities, ex-CIA personalities, have criticized um, Trump's suggestion that they put the boots on the ground. The Trump admin is increasingly unhinged by the disaster now unfolding in the region because they cannot have any ramp off from the war. Trump keeps suggesting negotiations are taking place without any confirmation from Iran or in the vain attempt to off-ramp from this disaster, which has impacted the stock market terribly. Once the Houthis start attacking Bab al-Mandab Strait, where Saudi Arabia's oil continues to flow, the oil shock will likely worsen because that means Saudi will no longer be able to export its oil, and that could hit around 7 to 10% of global shipment. The market has not priced in many other impacts from the crisis, such as the many months or even years to bring the oil and gas production back to full capacity, even if the war ends in the coming weeks or months. Definitely, the US has lost its stature in the world as Iran has managed to attack and cause immeasurable damage to the US military bases in the region. The US is also showing its allies how unreliable the US is when it comes to the security of its allies. For example, pulling the uh, THAAD and Patriot missiles off from South Korea and Japan, and also pulling the air defense system out from other countries in the Gulf region to Israel. So all these are very bad for the US uh, diplomatic stature. So elsewhere, the war between Russia and Ukraine is continuing unabated. However, with the relocation of monetary resources and equipment from Ukraine theater to Middle East, Russia may now have the upper hand. So you can see that not only mentioned allies in the form of Korea, Japan, or Middle East, even in Europe, okay, they have moved the 750 million destined for Ukraine and use it to replenish US weapons. So meanwhile, Ukraine is also attacking Russia's oil industry, which could cut Russia's oil production, or if not uh, store Russia's capacity. Now, we are already seeing potential oil flow being cut off from Saudi Arabia, and right now, oil production from Russia is being affected as well. So we are in we can call it a war for oil, an oil war, okay, in such a sense that everywhere that where oil is being produced is being hit. Okay, so this over a longer term period is very bad for the global economy. So Evelyn, back to you.
Remember I said earlier this year that when we study the Peng Wu 八字, and also together with my book, we already say about potential energy crisis this year. Okay, it's in that book. Yeah. So yeah, let me share my screen again. Okay. Is the current slides. Okay. Yeah. Okay. So yeah, if you can see. Okay. Yeah, you should be able to see my screen. Okay, good. So yeah, we actually we talk about what we have talked about and what we have predicted. We have even more details in the overview of 2026 Firehorse Astrology and Global Trends Talk. So the replay actually is available for non-members or for non-astrology and Global Trends member. You can actually get this recording here. I think for some or maybe 67 ringgit, if I'm not mistaken, is a very small amount for the information that you get. Okay, yeah. And you also can get our book as well. We have talked about that. Yeah, you can check our book, and or you can get this book for free. If you are if you join us as Astrology and Global Trends member, you can get this book for free and the talk for free. Actually, both already is both items already 100 ringgit plus. And right now, our membership is at 249, so it's worth it if you really need to use all these informations on global trends to help you in your work or in your investment. You can, sign up for membership. Maybe PC, you can drop the membership link into the chat box. Okay. And you can get the early access to the monthly forecast right now, that what we are doing, a full recording, okay, released to you tomorrow, or even I think the most is 2 days. Normally we promise 3 days. Normally I think I release it within 1 or 2 days after the talk. And also today's every month the presentation slides that we presented, you will give it to you. We have a welcome gift to you, exclusive Telegram groups for discussion. Okay, and we will also share some of our investment strategy, and some of the investment strategy, and include what are the stocks that both PC and I are personally have interest in. Even some of our members also drop in, their opinions as well. We have very smart members here. Okay. And yeah, and special discounts on our course. If you join us as a premium member, you will get even better still, a weekly, market insight report, and a weekly Chiman daily directions that will help you to enhance the energy, because I says that this month is a very chaotic month. You need to enhance energy. Maybe you need to take a walk in the park, as Sophia has already suggested. Okay, or you can enhance through the Chiman energy. Okay, so these are our testimonial from our students, from our members as well. Okay, yeah, that we have done this. We have already run this for many years. I think for already this year will be our 5th year already. Okay. Yeah. So since we started the platform, we already shared about gold 2022. Yeah, we started this even in our Unlock Your Wealth Potential. Those who got the book knows how to take action. I think you are in a good position. Even go down, it never goes down to the level that it was in 2022 already. Okay. Yeah, that was the past already. But yeah. So, and then some of the stocks that we have shared also, has gone up multiple times, like 200 over percent. Okay. So I hope that some of y'all can take action and join us if you do need guidance in your investment. Okay. Yeah. So yeah. So in summary here, I would like to state that it's still a heavy unstable condition. Okay. In terms of the natural disasters, there was strategic restraint, resource protection, and we know that resource is scarce. Okay. Yeah, higher risk of landslides, precious metal, especially silver and gold, especially silver, I think this month will have a lot of attention. Then economy is defensive, practical, and reserve forecast, and selective, cautious. You have to be selective and cautious in your dealings, in your investment. So it's better for accumulation and quality rather than speculation. So over to you, PC, to make the final summary.
Okay, hold on here.
Mm.
So the Iran war, the Iran likely lasts longer than expected due to conflicting priorities. The US will find negotiations difficult. As you can see, Trump admin says one thing, the Iran government says another thing. So there is very little room for them to negotiate. So industrial demand for silver in China remains strong, with significant depletion of stocks from the COMEX, SGE, and SFE. So while expectations that the US will announce a floor price for critical minerals in April, including silver, massive destruction of infrastructure in the Middle East, which will result in even greater supply strains in the global market. As I mentioned, not only oil, but urea, sulfur, which affects manufacturing, chemical engineering, as well as fertilizer and eventually food. Market volatility will remain. Trade carefully with some hedging options.
Mm. Okay. So I think that's it from us for tonight. Let me check the chat box if there's any question. If not, then we call it a night off. Yeah, we would like to apologize for the inconveniences that we have that the technical errors that we have tonight also. So anything else? Any questions? Yeah. If let me um if no, I think let's call let's call it a night already. Um
Yeah.
yeah. Okay. So I think good night. Thanks for joining everyone. Okay.
Yeah.
And see you all
Thanks for
next month.
signing in. My apology because I do not know why my broadband keeps on uh going off and on, going off and on. So hopefully next session will be less having to endure this. I think this is the first time we have this situation happening. Yeah, maybe my laptop is still on holiday mode.
Yeah. So yeah, another way is that time to get a new laptop. Mm. Okay.
Okay.
Okay. Thanks. Thanks. Bye bye.
Bye bye.